If AI drives the cost of writing software close to zero, what actually makes a software company durable?
I think this is the existential question that engineers, founders, and VCs are asking ourselves.
So, when you look at a company today, what makes you think this could still matter in 10 years' time?
The ultimate value that software provides is trust.
If agents are starting to write more of the code, what happens to dev tools, open source, and effectively the role of an engineer?
I think what we're seeing the foundation models be optimized for is to ultimately replace engineers.
It's the trillion-dollar question, right? What does this mean? Lenny, if AI drives the cost of writing software close to zero, what actually makes a software company durable anymore?
Look, I think this is the existential question that engineers, founders, and VCs are asking ourselves. It's probably the topic that comes up most consistently in our staff meetings at Amplify, whereas what is the value of a software business and how does a software business capture value? I guess the way I think about it is historically, software moats in principle arose out of the difficulty of creating software. It's important to distinguish maybe between temporary technical moats and then persistent or durable technical moats. And I would say most would agree that kind of consistent, persistent, durable technical moats are becoming more and more scarce. But the way that actual durable moats would be established historically was because you could take advantage of this transitory period where you have some insight or innovation, you build some disruptive technology, and you would have some lead time. Thereby, you can go and establish distribution, you can get workflow entrenchment, you can build up network effects. And those are the classic moats that would be more durable. Increasingly, you would give yourself time and margin for error because it'd be so hard for someone to come in and replicate your technology. Now, that lead time, which was maybe, I don't know, measured in years or in certain cases months, that's being driven down to weeks. And so the margin, the ability for a company to actually bring something innovative to market, get that distribution, entrench themselves as kind of the de facto standard is a whole lot more difficult. I think it is a lot harder now to establish those moats because everyone is on equal footing. To me, ultimately, like, what is the value of software? Certainly there's the bits that you ship and like the value that your software delivers to an end customer. But I think there's also the ultimate value that software provides is trust. And I think that trust can be decomposed into kind of three or four key criteria. The first is broadly what I'd call like maintenance. You build some piece of software, it runs, it does its job. What happens when a bug is introduced? What happens when there are new feature requests? Who's basically on the hook for making sure that that software is reliable? Who's on the hook for making sure that your users are supported? So there's that value. The second is kind of this broad bucket of categories around optimization of that software, right? Like the beauty of software existing in a market and that software being used by many people is that there's all this selective pressure where people are banging on it, people are using it, they're discovering new bugs, they're identifying opportunities for improvement. And so that's why we get pieces of software that become really, really good, right? There's these market forces that are always applying pressure to it to make sure that, again, that software is constantly improving, it's more reliable, it's more secure, and everyone benefits as a result. What happens if we remove that selective pressure? If all software lives in like it basically serves the needs of one user or one company, I think we lose that. And I think the third, which is also being neglected right now, is the value of an ecosystem, because an ecosystem ultimately brings down transaction costs. When we're all transacting or leveraging the same building blocks, it makes it easier for not only for our systems to talk to each other, for us as users of that software to speak a common language. Like the canonical example I'd use is Salesforce. The value of Salesforce is not the interface or the infrastructure or the APIs, I argue, it's the common data model, right? If I'm hiring a salesperson, odds are that person understands the Salesforce data model. They could ramp up really, really quickly. They could get up to speed on my business, and they could basically be productive from day one. If everyone's cobbling together their bespoke CRM, they've got their own lingo, they've got their own terminology, they've got their own way of doing things. Well, that just creates a bunch more friction that gets introduced broadly into our ecosystem. That friction ultimately reduces productivity. So I think right now there's this, we've got this new, really powerful tool. It's bringing that first kind of value of software almost close to zero, which is like we can reproduce anything really quickly and we could customize it to our needs. But that's day zero. What happens on day one, day two, day three? And then what are the broader implications for us as an industry? And so I think we're going to see kind of a reversion to the mean, where I could envision that there will be some common building blocks that emerge and that we all use. And then ultimately, perhaps the UIs will be super pluggable. The CRUD layer and the APIs that we design could be pluggable. But I imagine there will be a core set of primitives that emerge. And those primitives will be really, really valuable and allow us to build more sophisticated applications that are tuned to our specific needs. And this vision of malleable software can come online. With respect to durability, distribution is going to be king. And the question becomes, how can you win over your users really, really quickly? But that time horizon is no longer measured in months. It could be in weeks. And the companies that win will reach escape velocity far faster, in my view. And then they'll be able to continue to iterate with their users and kind of develop these high velocity data flywheels that allow their software to ultimately self-improve. The way that these standards or these new kind of platforms emerge, it'll be similar, but I just believe the timeline to break out will be a lot shorter and there'll be a lot less margin for error, which again, I think now speed and agility is king. I think it's always been that, but all these trends, all these phenomenons, I think they're a lot more heightened in this day and age.
Couple of things I want to unpack here because you've said a lot of very interesting things. We talk about what is moat now, durability, distribution. I want to tap into a few areas. One is what is a moat? Because the old moats have changed to what they are today. I speak to many founders who've taken companies public, who've built companies of exit, and they said the company that took me 5, 6 years to build, I could have probably built it in 6 months today. How do you establish a moat today? I know you spoke about lead time and distribution and how quickly you can get to market, but software is really rewriting the rules of building today. And it's only getting better every single month or every single quarter. So, what does a real moat look like today, especially in your area in infrastructure? Is when you look at a company today, what makes you think this could still matter in 10 years' time?
I would probably distinguish between user software and developer or infrastructure software. I think that we haven't gotten quite to a place yet, and perhaps we will, perhaps we won't, where the models are really good at building complex systems. Where they still struggle is kind of architectural coherence. Now, there's no doubt the foundation model companies are making a lot of headway there. I think if you look at the priorities of the frontier labs, where they're really pushing is how can we let the model cook for days, weeks, and kind of brute force a system. And so, that's how you see people building entire new web browsers, maybe even databases. The question becomes whether those things will be production ready. Today, though, I would say that you still do have some lead time in infrastructure to build something novel that is difficult to replicate. And I still think the number one moat for any sort of infrastructure software company is related to that point about trust. If I'm going to be running on a database, if I'm going to be leveraging some new runtime, if I'm going to be building on some sort of application platform, and I'm going to be entrusting my business, which is all software now, or most of it is software, on that platform. Well, I need to know that that thing is rock solid. I need to know that if something goes wrong, I'm going to be supported. This is why you have these SLAs of 4 or 5 nines and they're ironclad. I don't think that's changing anytime soon. In fact, I think companies that have a strong brand and customer trust and developer love, those brands are just getting stronger and stronger. The question is, again, like, how do you establish that in a short period of time? And I think the key is ultimately like the shortest path to winning over production workloads and letting your customers become your loudest champions. I look at a company like Temporal, where from day one, they obviously spun out of Uber, and then that open source project bled out to ultimately support mission critical workloads at companies like Coinbase and HashiCorp and Datadog. People could look to those companies that are sophisticated engineering orgs and say, hey, if this is good enough for them, it's probably good enough for me. So that, I think, is the most powerful moat, that brand that you establish. And again, I still see that holding in infrastructure, at least for the foreseeable future. Where it's a little bit more challenging is in software, obviously, right? And I think that there are classes of companies that I think are just going to be absolutely railroaded by AI. And I think a lot of those are point solutions where ultimately the key why those companies were able to emerge is they were able to arbitrage time and engineering resources to spit out something that other companies just didn't have the resources to do. If you need some sales productivity tool and you're sitting inside of a large Fortune 1000 or even a digital native company, you're out there trying to actually develop software that impacts the core business. And you don't have this precious engineering resources to spend on some internal tool. Now, I think that trade-off is far more palatable. And so those companies, I think, are going to come under a lot of pressure. But in terms of infrastructure, core systems of record, I see this as not obviously as ripe, just because the bar for quality, the bar for trust is that much higher. So that to me is still the kind of the sacred cow.
And I think it's interesting to see how things have evolved over the last couple of years in venture, where the hype is. For you, when you go back to, I guess, that period of time when ChatGPT came out and there was a buzz in the market around what's possible with AI, take me back to that moment because as an investor, you're always looking for the next best thing to get into and how you can support your portfolio companies to grow. But when that moment happened, did it change your frame of mind, how you thought about venture, how you thought about investing, how you thought about building companies?
It certainly felt like a massive inflection point. And look, Amplify was founded in 2012. I think that also happened to be the year of AlexNet, and AI was always a kind of a core pillar of the firm. And so we've been very closely monitoring the progress of this market. I sort of liken it to the closest analog in my head is you had the internet that emerged in the early 90s effectively, and the consumer internet with Netscape. But it wasn't until Google was able to take these kind of esoteric technologies and really surface them up to the mass market in a way that made the internet actually usable for my parents. Well, I think that was the same thing with ChatGPT. Like you hear about AI, but I remember my parents, they're Russian, so they would always bother me to like write a letter to their HOA, and they would send it to me in Russian, and I'd translate it to them for English. I'm like, okay, after doing this at least once a month, I'm like, here, mom and dad, check out this thing. And you could literally either talk to it or you could write it in Russian. It'll give you a perfect translation into English. And so now I wouldn't call them power users just yet, but they're using it almost every single day for tasks as simple as that to more sophisticated stuff like looking up the news, or my dad will literally have conversations with it. So it was that similar kind of moment where you knew that this technology that was more promise than reality for a very long time was going mainstream. With respect to our business, I thought the major applications of ChatGPT were consumerish in nature, and so we had an appreciation for how this was going to be rolled out to enterprise. But I think what struck us obviously is the industry that's been most transformed is the one that's nearest and dearest to us, which is software engineering. And the pace of change there has been eye-opening, doesn't do it justice. But I wrote a blog post a little over a year ago where I described how the software delivery lifecycle and the developer toolchain is going to have to evolve in the face of agents. And at that time, we were still very much in autocomplete mode. And it seems like the world changed about 6 months ago as the models, starting with Opus 4.5, how they got so much better with long context and reasoning and tool calling, where we've really evolved from these kind of power tools that augment the developer that ultimately are starting to replace large swaths of developer work. And that, of course, is completely changed how we think as investors in terms of the types of companies that we find interesting, in terms of how our own companies are leveraging this stuff to get ahead. And so now, again, if you're not on the frontier of how you're leveraging these tools to stay ahead, I think it's hard for us to entertain those conversations seriously.
The excitement is there in the market. So it's quite interesting to see how people think about this, especially in your seat as a general partner at a fund. I'd love for you to tell us a little bit about the fund, just very briefly. You said the fund was started in 2012. Tell us a little bit about Amplify.
Amplify works with deeply technical founding teams. Our mission and vision is to be their first call when they take their life's work, typically some sort of deep technical insight or innovation, and want to go after some commercial opportunity. The origin story of Amplify starts with this observation that we had that the types of founders that were building B2B companies really started to change in the early 2010s, or maybe even before that. Whereas before, the typical enterprise founder grew up at Oracle or inside of EMC, and they were typically a GM and they worked with engineers, but they were typically in go-to-market. They were kind of a little bit more plug and play, right? Because there were almost these mini founders inside these large companies. Starting in 2008, 9, 10, 11, we saw this shift in the types of founders that were starting companies where they were typically very, very technical, a little bit younger. They were experts in parallel computing and distributed systems, and they were coming out of these modern day research labs, Google, Meta, Uber, Twitter at the time. And they were taking those insights and they were ultimately saying, hey, there's a lot of people out there that are like me and they could benefit from these technologies. But because they were, deeply technical, they had far less experience thinking about that technology in terms of a product, thinking about building and scaling multidisciplinary teams. and especially, I should say, how to take those technologies to market. And at the same time, what we saw on the venture side then was what used to be these very focused early stage funds that would really pride themselves on rolling up their sleeves and working with these founders at the earliest stages. Those funds started to balloon up in size, and they become these generalist multi-stage funds where the priorities shifted to writing bigger checks. We saw this impedance mismatch where there was this new class of founder that needed and wanted more help at the earliest stage than ever before, and yet the venture ecosystem wasn't really set up in a way to support them. That was basically the reason that Amplify was started, right? We saw this need in the market, and we got a collection of folks that really love to do early stage work on these technical projects, and ultimately met those founders where they were. And so now we are investing out of our sixth fund. We've raised over $2.5 billion, but the core MO of the fund is really the same. We do seed and series A. We partner at the earliest stages, often before there's a company, sometimes before there's a full team baked. And we really pride ourselves on being an extension of the founding team and helping our founders navigate these kind of formative startup challenges of, hey, how do you take this insight, turn this into a category defining product? How do you build a world-class team around that? And then how do you get your product in the market in the most scalable and repeatable way? That's why we exist.
This is ultimately a first check VC right there in the beginning, sometimes even before formation of a company's put together.
That's right.
So, what would you say the value is of an investor today in the market versus when you first started out many years ago?
I see three key criteria that every founder should be looking out for. The first is, does this VC get me? Are they aligned with my vision? And that's where I think focus really helps, especially when you're working on these deeper technical projects. Like if you don't understand how these things work, if you can't reason about the product, if you don't have some appreciation for the end user and the developer experience or the end user experience, it's hard for you to be, kind of maximally helpful. And then are you in lockstep about the opportunity and how you're going to go about it? That's number one. And there, I think domain expertise really matters. Point of view really matters. Because again, all that ties into the second point, which is, can this VC actually help in an actionable way and change the trajectory of my business? And so with help, I think it's all about, hey, is this partner going to hustle on my behalf to open doors that may not be otherwise available to me? And so are they connected to the right people? Do they know the right early adopters? Do they know all the right recruits? I think recruiting obviously is the way that a VC can help a company more than any other way. It's the way to be, again, maximally impactful. But if you know the right people who can come into the company at the right time, the amount of positive change that you can introduce is super meaningful. And again, to do that, you need to be connected with the right people. You have to have a point of view, and those people need to trust you. And then third is signal. Does your investor bring a set of experiences and a track record where they're respected by other peers? And that ultimately helps, again, with recruiting. It helps with unlocking future fundraisers. And so those are the three things that I think matter when selecting your partner.
And Lenny, you're in the infrastructure space, so you're effectively an infrastructure investor.
Correct. Yeah.
Here's a question I'm really keen to ask you. If agents are starting to write more of the code, that's a ongoing cycle. We're seeing it everywhere. What happens to dev tools, open source, and effectively the role of an engineer?
Oh man, that's the $1 trillion question. I could speak out of both sides of my mouth. The biggest unknown right now is, will the models keep improving and to what point? With every subsequent run, I think what we're seeing the foundation models be optimized for is to ultimately replace engineers, right? Make them more autonomous, navigate repos, use tools, and complete these long horizon tasks. And the benchmarks are increasingly geared to how long can these models run independently, and like, can you brute force solve a problem? The models are really focused on long context problem solving, but there are trade-offs with that where ultimately I feel like we're sacrificing simplicity and elegance. And that's why you hear these constant complaints from developers that were used to one style of working with the models. I think whether or not they wholly replace software engineering, I bet not. But I think what's going to happen, which is inevitable, is we're seeing more software created than ever before. We're seeing more software businesses created than ever before. We're seeing a premium on, I think there will be an increased premium on making sure that software works, is reliable, is high quality, is performant. And to do that, I do think that there's going to be more engineering and computer science expertise required. And I could see a world where the talent density of places like Silicon Valley, where developers can bleed out into companies of all sizes, kind of Main Street, And those companies will have the opportunity to work with engineers who were previously confined to, these very talent dense ecosystems, because those businesses will increasingly be powered by software.
What we're seeing on the recruitment side is there is more of a need. But is that a temporary need? Is that going
That's
to
right.
evolve? Is this gonna change? Does that role change to something else? I think one of the most wonderful things about software and technology is it's constantly evolving. And I think being married to a coding language or a piece of technology is probably not the right way to go about things because you constantly have to keep your fingers on the pulse. How is this going to transpire?
What I'm excited about is we're going to see so many interesting case studies play out over the next year or two. We've got companies like Block, right, that are massively cutting human labor, right, and trying to rebuild the company with, intelligence at the center of it. We also have companies, right, namely the foundation labs, they can't hire engineers fast enough. And I think what we're going to find out, we're going to get a better grip on in the next year or two is right now the cost curves of software projects and the productivity curves for engineering output are totally a mess. Historically, whether you're writing a new feature, producing a new query engine, you sort of know that if I staff my project with X amount of engineers and I have Y time, I can get something usable in this time frame with this budget. Now, like, you add in these models and tokens into the mix, nobody has any idea. And so you see companies that are over indexing on token spend and they're blowing out those budgets. I think ultimately where the rubber's going to meet the road is there needs to be some sort of ROI. It's like there is a job to be done. There's going to be some optimal mix of human engineers and token spend. And I think what's really exciting is we're going to arrive at some equilibrium, at least until the next model drops. And so that's what I'm excited to see. Everyone's just shooting from the hip and trying to figure it out.
As an investor, when I'm meeting with founders, some of the things that I've been hearing recently is we need to raise X and we're going to spend this much on token spend, and then we'll bring in maybe one or two engineers. So, what's going on there? Because the other side of it is the tokens are going to be more expensive as we see the market shift. Is there going to be a balance? That's the real question.
It depends. For the frontier models, especially with compute scarcity, I could see a world where access to the state of the art model, token spend probably will increase, particularly for these kind of long horizon, reasoning heavy tasks. What we are starting to see now, though, is that when a task is well understood, companies can use an open source model. And we're seeing folks build out harnesses where certain queries are routed to a cheap commodity model. And then for more complex work, it's outsourced to the state of the art Anthropic or OpenAI model. This all relates to my point where there's a job to be done and we're trying to figure out the most efficient way to ultimately do it. I think all these memes around token maxing, I find them funny. But ultimately, again, if you're a developer or if you're a VP Eng, you need to chart the shortest path to some sort of successful outcome. What's exciting right now is I think we are seeing a whole host of approaches that are going to be attempted. And I think there's going to be a bunch of interesting solutions that CEOs, founders, engineers can ultimately start cobbling together to make them a whole lot more productive.
Lenny, thank you so much for making the time to being on this podcast. It really has been a lot of fun learning a lot more about what you're doing and how you're thinking about the venture space today and the infrastructure space. Just to finish off, as we do with every single guest, is a book recommendation. What would be your book recommendation?
I read Friedrich Hayek's Road to Serfdom. And I think Hayek's probably the most eloquent writer and speaker on the topics of collectivism, liberalism, the free market. I think it's the clearest articulation of how collectivism ultimately leads to a stripping of liberties and ultimately leads into a tyranny. I find that an important read just to brush up on and refresh every few years. And again, I would encourage every high school, at least college student to read it because especially given the state of things right now.
Sounds good. Lenny, it was a pleasure. Thank you so much for making the time. I've really enjoyed this one. And hopefully, we'll have you back on.
Loved it. Thanks so much.
Thanks for tuning in to another episode of Inside the Silicon Mind. This podcast is powered by Harrison Clark. For more episodes, don't forget to subscribe and hit that notification bell. As always, stay curious, stay consistent, and stay inside the Silicon Mind.